On social media, you hear this advice a lot, and this is something that so many big creators are saying and advising their followers to do. I think it's high time somebody address this issue. You hear things like tier lot size, tier lot size, but this is a very, very terrible trading advice, especially for new traders out there. So in this video, I'm going to explain the reason why it's a very, very terrible forex trading advice. I'll also explain why so many traders believe it and what you need to do in order to avoid this kind of advice. But before we talk about why it's such a terrible advice, let me explain what it means to tier lot size. This is a statement that is used by a lot of creators when they want you to over leverage and use a bigger lot size so that you'll be able to raise your account or double your account very, very fast. But what they fail to tell you is that this can also make you blow your account very, very fast. So why is it such a terrible advice, especially for new traders? Well, the first reason is because of over leveraging. In trading, when you over leverage, you are risking a huge portion of your account on that particular trade. So if it goes against you, this can wipe out your account and is very, very bad, especially for new traders. Now, the second reason is because of your emotions. When you are very, very invested in that trade, it will affect how you trade. For instance, you won't let the trade move too much, especially when it's making a pullback. What do you think you are going to do if you know that your life savings is what you are trading with and it's making a pullback, or it is retracing back to your entry or below your entry? What do you think is going to be going on in your head when that trade is retracing and getting closer to your stop loss? Of course, you are going to get emotional about the trade, and this can cause you to screw up the trading strategy. In this same video, I'm going to tell you how pro traders think, but before that, let me tell you the reason why so many traders accept this advice. Now, the reason why so many traders believe this kind of advice or listen to this kind of advice in the first place is because they have very small capital. When you think about it, most traders are trading with very, very small capital, maybe $10, $20, $15. And this is the reason why they believe this kind of thing. When they see people who they look up to saying something like this, they are forced to believe it. Now, the second reason is because of the flashy lifestyle of those people who are mentioning things like this or even giving this kind of advice. You see them with very, very flashy lifestyle, and as a new trader, you want to live that kind of lifestyle. So when you see them giving you this kind of advice, you tend to believe it. The third reason why a lot of traders believe this kind of advice is because they want fast money. You hear traders trading with $10 and they're trying to scale or flip the account to a very, very huge amount of money. So to do this kind of thing, you need high leverage. You need to tier lot size, so to speak. So that's why you see that a lot of traders actually accept this kind of advice. But let's talk about how pro traders think when it comes to forex trading. The first thing about pro traders is that they are not focused mainly on flipping their account. What they focus on is acquiring large capital. So rather than trying to take their small capital and flip it to a huge amount of money, which will cause them to screw up their strategy, get emotional, and cause different kind of trading errors, they are focused on getting larger capital. And how can you get larger capital? Well, nowadays there are prop firms that offer you capital to trade if you know how to trade. I'm going to leave a link to the one I personally use in the description of this video. Now, the second thing that pro traders do is that they use fixed risk. Whether it's 1% or 0.5%, they always keep their risk the same. So when you do something like that, you get into a state where you are no longer trading from an emotional standpoint, so you can become more logical. You close the trade when it's ought to be closed, you use proper stop loss, and you leave the trade to get to the right target. This is how a lot of pro traders actually trade, and this is something that will help you to stay long in the market and to survive different market cycles out there. If this is the first time you are seeing one of my videos, consider subscribing if you got value from this video. This is one of the many videos in my series called The Worst Trading Advice on the Internet. So if you want to see some of the worst and terrible advice on the internet that can cause you to blow your account, that can cause you to destroy your account, check out this playlist right here that is showing on your screen for more of the terrible trading advice. Check it out.